Today's video we're going to be focusing on the 5 phases in Bitcoin price discovery, because every time Bitcoin breaks into price discovery, there are very interesting sub-phases that occur every single cycle, and price discovery corrections are a part of it. So the fact that we're seeing a 15% pullback right now, that just means that we're right on time, and 2013 also showcases these phases recurring. So we'll be talking about these phases in a little bit more detail today. So subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward, and let's dive right into it. But first, a quick message from our sponsor. Our sponsor for today's video is bitfinex, and they are a really great crypto exchange for you to consider for your daily crypto trading and investing. They are a no KYC, no VPN futures exchange, and their liquidity is on par with the top exchanges. Users can trade over 250 trading pairs with up to 125x leverage without restriction. And to celebrate our partnership, we're running a very special offer. From December 17th until December 31st, you can sign up using my link and deposit $200 to get $100 back, and win up to 6 Solana when you trade on bitfinex. Deposit rewards will be distributed on the very next working day, and the Solana will be distributed after the campaign ends. And for more information, check out the link in the description down below. Thank you very much, bitfinex, for sponsoring this episode. Let's dive right into it. This is 2021, and in 2021, we saw in the first price discovery uptrend, this general uptrend right over here. In week 6, we saw a pullback of 16%, and we actually saw a 16% pullback already occur in week 7. So technically, we've already matched the 2021 16% pullback already. And that's the lowest, I'd say, that we could see this price discovery correction take place. Because historically, if you look to other cycles, for example, 2017, it was in week 8 where we started a multi-week price discovery correction of 34% in depth. So you can see here that this was triggered in week 8 for a 3-week correction until we bottomed. So in fact, you can notice that when we topped out, we produced a long downside wick. So first of all, we really deviated towards the downside and then actually saw quite a bit of relief. But in the next week after that, we actually saw additional downside continuation because that relief was simply not sustainable. And after the relief, we saw new lows, in fact. So it's going to be quite interesting, because if we look at also this price discovery correction, which occurred a little bit later in 2021, it's the same story, isn't it? So we top out first, we really downside deviate, produce that downside wick in this week right over here, and then in the following week that relief is simply not sustainable and we drop and deviate towards the downside to new lows once again. So 2016, just notice 2016 and 2021 are quite similar in that respect, where they pull back quite extensively to the downside wick, and then in the following week, they actually pull back to lower levels. So we're definitely seeing quite a bit of volatility right over here in this week, where we've really downside deviated. Now we're recovering quite a little bit, but it's possible, based on history, that this could be relief before additional downside in the following week. Remember, this is currently week 7, and it's in week 8, according to 2017 right over here, where we downside deviated, and then in week 9 we actually saw additional downside to new lows. And if we're looking at 2021 right over here, then we downside deviated, relieved, and then in the following week we downside deviated to new lows. And I know that this correction takes place a little bit later than what we're talking about here with week 6, week 7, and week 8. You can see here that it was in week 6 where we dipped 16%. In week 7 we actually saw upside in 2021, and in week 8 we saw 8% downside. So not too much downside in 2021 at this point in the cycle, but when we consider 2017, 34% downside in week 8 to week 9 to week 10. if we talk about week 7 right over here, we topped out and really experienced a multi-week pullback in 2013. And I wouldn't really focus too much on the downside or the length in the duration of that correction for 2013. I don't expect us to drop 75%, and I don't expect that correction to last 13 weeks. But what's really valuable here is that this is a week 7 pullback, which just showcases to us that week 7 and week 8 tend to be problematic zones for Bitcoin's price action, and it's week 7 right now, and we're seeing a 15% pullback, and it's not even week 8 yet. So week 8 could see things become a little bit deeper, especially if we lose critical levels of support that I talk about in my newsletter, or also I talk about on Twitter as well. So really important to just talk about the depth of these corrections, because even though in 2021 you saw we had a deep correction which lasted really maybe a week. So first of all, really 1, 2, 3 weeks here, and maybe 3.5 weeks because of this upside wick right over here. So it's 3.5 weeks, and we actually pulled back 31%. And so that's a 3.5 week period, 31% in 2021. 2017, we have 1, 2, 3, so 3 weeks, 34%. So we're already seeing quite a bit of recurring tendencies whereby we see a 30% pullback or so, and it takes 3 to 3.5, maybe 4 weeks at most in total. So if we're seeing currently that this is a pullback here, 15%, and apologies for all the zooming in, zooming out, I just want to show a very clear picture to you. This is a 15% pullback. It's happened in 1 week, and if we see pullbacks last 3 to 4 weeks, then maybe we have a few more weeks left. And if we see pullbacks typically be 20%, 25%, 30%, then this being a 15% pullback, maybe we have a little bit more to go. And that really depends on whether we lose this high or low technical uptrend, which we're still holding as support, and if we lose this critical demand area as support as well. Losing those 2 weekly levels, that's probably going to transition us into a correction, because technically this is still just a dip. However, it is a very deep dip. So if we're talking about dips, minus 16%, minus 15%, that's the absolute most that I'd say we could constitute as a dip. Even lower, and it's a correction, because that just makes sense as well. We've dipped 15, 16% right now, straight into higher time frame supports. So that technical uptrend I was mentioning before, that cluster of support around here as well. Lose that level, and we're going to simply transition into a correction and dip and pull back actually a little bit lower than that, and simply go into maybe 20%, 25%, 30% at most territory. And price discovery corrections tend to be 30% deep. And if we're talking about, for example, this pullback right over here from March to August, that's been 34%, believe it or not. And if we're talking about even pullbacks within that region, this here is a 25% pullback. This right over here is a 30% pullback. So even here, this is a 24% pullback from what I remember. And I was talking about these pullbacks in the reaccumulation phase in a lot of detail in yesterday's video, and it just shows to us that this general correction was 34%, multiple 25% to 30% pullbacks within this reaccumulation range, and it just showcases that 20%, 25% pullbacks, 30% pullbacks, they're not out of the ordinary when we compare and actually consider this March to August period of this year. And it's also not out of the ordinary if we compare previous price discovery corrections in previous cycles. So 31% in price discovery correction mode in 2021, 34% right over here, multiple weeks at a time. And that's simply how long those pullbacks last. And it's not just the 25 to 30% pullbacks that have occurred here, and also in price discovery corrections in previous price discovery phases of the market cycle, but it's also pre-2024 where we saw 25% pullbacks, 22% pullbacks, 20% pullbacks. So we've seen 20% pullbacks transition into 22, 25% pullbacks, transition into 30%, 25% pullbacks, 25% pullbacks, 30% pullbacks. You can see how these pullbacks do occur, and they're getting a little bit deeper as we go along. And they do last a bit of time. But as we transition into the shallower, or at least into the later phases of the parabolic phase, just notice how 25% pullbacks can occur within 3 weeks, for example, and then rally even higher. And the same thing right over here, for example, 2017, you can see that this can happen in 2.5 weeks or even shorter. Or even here, 30% pullbacks can happen in 1 week. And that's my point, that as we progress, maybe we see deeper pullbacks potentially, but also they might be happening quicker as we enter the final stages of the parabolic upside phase of the cycle. So these deep corrections can be flash corrections later on in the cycle. So the fact that we're seeing this current pullback, I think there's an element of being grateful for the fact that maybe this is going to be a multi-week correction. We're not going to have that much time. We're not going to have the luxury of time to be accumulating and reaccumulating and dollar cost averaging into such a correction for a few weeks at a time, because those corrections could be shorter later on. But just the last thing is that we don't tend to see many corrections in price discovery. 1, 2 major corrections, 3, and then the next correction is the bear market, which lasts 1 year. Here, for example, we see 1 correction, 2, 3, a 4th correction right over here, and then it's the bear market afterwards in 2016, 2017. And in 2013, we saw 1 correction, and then the 2nd correction, and then the next time we peaked, or at least the next time we saw a correction, that was simply the next bear market. So really important to understand that First of all, the takeaways. This is what's the most important. The takeaways are first of all, price discovery corrections are natural. That's first principle number 1. Second, price discovery corrections tend to last a few weeks, 3 to 3.5 weeks, maybe max 4 weeks at a time, which allows for quite a bit of time to be bargain buying, dollar cost averaging, buying Bitcoin at a discount after a nice little haircut. Principle 3 is that these corrections can go as deep as 30%, 34%, and if you don't think it's going to go that deep, then maybe consider 20%, 25%, 30%, 35% as just general ladders. So those are the key things. And the 4th principle is that we tend to get only a real handful, not even a handful, because it tends to be 1, 2, 3 price discovery corrections, 1, 2, 3, 4, and 1 and 2. So we tend to get 2 to 4 price discovery corrections in price discovery. This is very likely the first price discovery correction. It will last a few weeks. It is the first one, which means at the same time that it's high probability. So once we finish this price discovery correction, it's not going to be the case that we drop into a bear market. It's very likely that we're going to reverse towards the upside for Bitcoin and altcoins. So that's where that high probability takes place. So I'm more confident and comfortable in buying into this pullback because I know that a reversal is going to be likely to occur on the horizon. However, in the second pullback, still the probability is quite strong that we're going to see further downside and then a reversal. However, that third price discovery correction, that's where things become a little bit difficult because first of all, after the, for example, first price discovery correction, here's the reward you can potentially generate from that. On the second price discovery correction, the reward can still be quite nice, a little bit lesser though compared to the first price discovery correction. And then when you buy on the last third price discovery correction, that reward is much smaller. And notice how the risk technically is much bigger, right? So the risk to reward changes in terms of where you buy on these price discovery corrections. So the reward is going to be lesser and lesser and lesser. And in fact, if you think about buying into a fourth price discovery correction, which might actually not happen and actually becomes a bear market, then you notice that the reward isn't going anywhere. And actually the risk is so much outweighing that reward. So really important, because if we got 3 price discovery corrections in 2021, and here, for example, there's 2, 3, and 4, if you bought on a third price discovery correction in 2013, then you'd buy into the bear market downtrend. And so with each passing price discovery correction, the risk simply mounts and the reward becomes lesser and lesser and lesser. So really important to understand that we only get a few opportunities for price discovery corrections. So I'm going to be buying into this first price discovery correction for sure. The second one, probably as well, maybe with less position size, because the risk does mount, and at the same time it's going to be less of a ROI for Bitcoin to be buying into a dollar cost into a price discovery correction, that second one. And on the third one, I'm going to avoid it completely. And this might surprise you, but it's better to be out of the market just in case the bear market kickstarts right over here on the third price discovery correction. Of course, in 2021, if you bought on the price discovery correction, the third price discovery correction, you'd be fine. Same in 2017. If you bought on the third price discovery correction, you'd be fine. Even if you bought on the fourth one, which is the only time we saw 4 price discovery corrections, that was in 2017, you'd still be fine as well. But if you bought it in 2013, that's a bear market. And imagine if you thought after 2017 we'd get 4 price discovery corrections, and then you bought after the third one here. So you bought in the fourth price discovery correction, which actually turned into a bear market, you'd be in trouble. So I would say I'm just going to be avoiding that third price discovery correction, because that's going to be a really risky and really not that rewarding for building positions. It's going to be more risk involved and less reward for a Bitcoin buy here in the price discovery correction that lays ahead. But for the time being, those are problems that we simply don't have. We actually have a high probability pullback right now, one that we can enjoy as we go into the holidays. So that's something really to focus on. This is a high probability pullback, and we have to also understand that this could last a few weeks. If we really break down those key support levels, the technical uptrend, the cluster of support around here, if we do lose these levels as support, then we're transitioning into that multi-week corrective period, which could still see price drop into 20, 25% and 30%. And I, of course, need to keep reminding that we only saw 25-30% pullbacks only a few months ago. So they do happen, they can happen, and it's something to keep in mind. And that being said, that's about it for this video. Subscribe to the channel for more videos like this in the future. Like this video if you enjoy content like this going forward. I'm Rekt Capital, wishing you a Merry Christmas and a Happy New Year 2025. Can't wait for what 2025 has in store for us going forward. That being said, Merry Christmas. I'm Rekt Capital, and I'll speak to you soon.